This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is Rivian. Don't count Rivian out. So Rivian is down now 93% from its initial public offering. It was valued about $150 billion a couple of years ago. It's now valued about $13 billion. Rivian's in the business of developing electric SUVs and pickup trucks and trying to be sort of up market. So it's also projected that its sales are going to be 24% less this quarter than was expected. Now, starting a electric vehicle maker from scratch is brutally difficult. It's one of the reasons why Elon Musk deserves so much praise. Much easier to do this if you start with as an automaker, a GM, a Ford, a Toyota, and then add electronic vehicles on, because you've already got a franchise footprint, you've already got manufacturing footprint and everything else. Rivian, in contrast, started from scratch. Now, a lot of people want to count Rivian out. It's literally down 93% from its IPO price, which is a crazy amount of erasure of market capitalization. It's cost Amazon a ton of money. Amazon's one of the huge investors in it, and it's been a disaster for my stock holdings in Amazon and Amazon generally. But they will have this quarter $650 million in car sales. That's projected. That's down from what they expected. But the good news is, if they can start to get to $2, $3, $4 billion in auto sales, they'll start to be a real automaker. So today's story is, and I could be wrong in this, which happens often, is don't count Rivian out. Thank you for listening to the Becker Private Equity and Business Podcast. Thank you very much for joining us.